This growth stock is firing on all cylinders. Zeta Global provides an AI-powered marketing platform, and they just reported 35% revenue growth. So is this a good time to buy the stock? At the latest price, Zeta now has a market value of $4.2 billion, with $365 million of cash on its balance sheet and $197 million of debt. The company has reported $842 million of revenue over the last 12 months, $230 million of adjusted ebitda, and $100 million of free cash flow. Net income, however, is negative $27 million, mainly due to $130 million of stock-based compensation. So Zeta stock is valued at just under 5 times revenue and 40 times free cash flow. Zeta Global has built a proprietary data set that contains over 245 million individuals in the US and 535 million globally. The company uses this data to help brands target consumers across the open web. And while 40 times free cash flow may sound expensive, Zeta's business is growing fast. Revenues have now increased more than 20% for 14 straight quarters, and adjusted EBITDA margins have expanded for 18 quarters. Large-scale customers are increasing, and net income is moving closer to profitability. Management has committed to decreasing stock-based compensation while reducing share dilution to the low single digits. And management expects growth to continue. Based on the latest company guidance, Zeta expects to hit $340 million of free cash flow by 2028. Assign a 20 times multiple to that figure and Zeta would be worth $6.8 billion, roughly 62% upside over 3 years. However, the case for Zeta Global isn't a slam dunk. In November last year, a short report from Culper Research sent the stock tumbling with accusations of revenue round tripping and the use of content farms. While Zeta bulls see a company building a moat around an expanding first-party data platform, bears believe the company is no more than a roll-up of poor-quality websites that are then used to harvest consumer data. The collection of data is a key risk considering the evolving nature of online privacy laws, and it's notable that Zeta's latest annual report no longer classifies its own dataset as opted in. That's a potential red flag, and it comes at a time when artificial intelligence is rapidly changing the way consumers use the open internet. Privacy laws could change at any time with an unpredictable effect on marketing platforms like Zeta. Over the short term, Zeta Global may continue to prosper as brands clearly derive value from the company's platform, but clouds of uncertainty are likely to linger over the stock. Ad tech is a difficult industry to be in, and it's not clear if Zeta has a strong enough moat. But these are my personal opinions, not financial advice, and I hold no position in Zeta Global. For more investing ideas, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.